Conversation now coming up with Jyotivardhan Jaipuria of Valentis. Jyotivardhan, thank you very much for joining in. Always great to have you on the show. So, it's not a big fall. It's only about 3.5% from the top for the Nifty. But I guess, there was a momentum in the market which was moving almost on steroids. We thought 20,000 is just there for the taking. And then we got into this consolidation patch. So what do you make of things right now, the earnings season, the global picture, and how do you look at the next couple of months ahead?
Yeah, so Surbhi, when I was last on the show also, I said that, we've turned a little cautious on the market. Essentially, it was the valuations which, in April they had become cheap, but that again become very expensive. So the margin further was low. So, we probably will have some time correction, some price correction in the market. And this is true for India, it's true for the globe. On the positive side, our earnings are still coming in good. We're still looking at like a 12% earning growth for the year, which will look especially good because I think US will probably get close to a negative or very flat earnings growth for the year. So though there's no recession in the US economy, there seems to be a recession in earnings at least over there.
Jyoti, your funder has been, buy local, avoid global for a while now. But yeah, one of the sectors where you have started dabbling in is pharma. Can you take us, what is the pocket that you like and the reason behind it?
Yeah, so Rima, you're right. So basically pharma, like I said on the show last time also. So, we always liked the domestic pharma and we had exposure there. But we started getting more positive on the US generics because the whole thing was the pricing environment in the US generics for the last 5 years have been very adverse. The prices have kept falling. And our view is that the prices have bottomed out, which if we see the results which have come and the commentary from some of the pharma majors also, they've also echoed more or less what we had been saying for the last few months, which is that, they're starting to see better pricing environment in the US. Now, mind you, I don't think the prices are going to go up, but for, companies who are constantly seeing a decline in US revenue because prices were coming down, a plateauing will help also because at least you'll not get a negative earnings growth coming from US. The demand environment is still good there. So I think, a lot of the pharma companies, and they've done very badly after the base of COVID. So they'll start seeing decent earnings growth. They had been ignored in the market for some time. They've underperformed. So that's where I think, we'll start to see a better environment for pharma and we'll probably see some outperformance coming through.
Okay, that's on the pharma pack. Jyotivardhan, thanks a lot for joining us. Take us through your call on the broader market as well, because right now the fall has not been quite as bad, but this is also a space which had run up very fast. Do you think that kind of outperformance is likely to last, or, as the market falls, you expect this to catch up as well? The mid-cap, the small-cap index?
Yeah, so see, in the mid-cap, small-cap, we were quite anti-consensus early part of the year where we said this year the small-cap, mid-cap will do well. Now, very short term, I think, we'll start to see some weakness in the small and mid cap. They've had a great outperformance, and as the markets start to, plateau off and come down a bit, you'll probably see, some of the underperformance being given up. But over the next 2-3 years, I would still be positive. So my view would be buy the dips in a lot of these small and mid cap because I think going forward, as the economy does well, earnings growth will be much faster for these small and mid cap companies, and that is what will drive the outperformance of the large cap. So it will be more like buy the dips in the small cap, don't run to buy them at these valuations.
Okay, you were also, getting back to the sectors. Now, we've spoken about the pharma space, which, you were talking us through. But anything else which you think, even at these levels, still looks attractive, still looks comfortable to be getting into?
So, the other theme would be some theme which we have been echoing for some time, which is a lot of the raw material prices have fallen. It's for sectors like, let's say, cement, sectors like the tile. And those are the things which, will do well over the next 12 months because even if the, demand environment remains stable, the margin expansion will be very large because, you've seen a 300-400 basis point dip in margins simply because the raw material prices went up. So, this is cement, this is tile. So these are some segments which will look very exciting.
Okay, all right, Jyotivardhan, thank you very much for joining in today. Good to talk to you as always. I'll look forward to more conversations. We'll take a break on that note. We'll